So let's talk credit scores and the factors that affect your credit. A credit score is a number between 300 and 850 that depicts a consumer's creditworthiness. The higher the score, the more financially reliable you are in the eyes of a lender. Credit scores are usually broken down into 5 different categories: poor, fair, good, very good, and exceptional. A poor credit score is anything under 580. A fair credit score is between 580 to 669. A good credit score is between 670 and 739. A very good credit score is between 740 and 799, and exceptional credit score is 800 or above. Your credit score is determined by 5 different factors, including your payment history, your credit utilization, the length of credit history that you've had, the types of credit, and how many inquiries that have been made against your credit. Be sure that you pay your bills on time, because your payment history counts for 35% of your credit score and is the #1 most important factor. The longer you've had credit, the better the picture the lender's going to have of your ability to make payments on time. The length of credit history accounts for 15% of your score. Credit utilization is the amount of credit that you've used divided by the total amount of credit available, and this accounts for 30% of your credit history. Most lenders want to see borrowers using 30% or less of their total credit line. So let's say you had a credit card with a $10,000 limit on it. You never want to have a balance higher than $3,000. Credit inquiries account for 10% of your overall score. A credit inquiry is when a lender or a potential employer or a landlord goes in and requests access to your credit file to get an overview of whether you have been responsible with your credit. There's 2 types of credit inquiries. One is soft and one is hard. Typically, a hard credit inquiry can affect your credit and could lower your score by up to 10 points. Hard inquiries would be for new credit, like a credit card, or if you're starting new utilities at a property or an apartment rental application or car loan, things like that. And finally, the last 10% of the score is based off of having different types of credit. As you can see, credit scores play a big role in determining whether you're going to qualify for a loan and what your loan terms will be. A good credit score can help you get a lower interest rate, higher credit limits, and help with more financial opportunities. So, how do you improve your credit score? The first step to improving your credit score is by reviewing your credit report for errors. You're entitled to 1 free copy of your credit report from each of the 3 major credit bureaus every year. So pull the report, check for inaccuracies, and dispute any errors that you find within the report. Another way to improve your credit score is to make sure that you make your payments on time. Late payments can have a significant impact on your credit score. So set up automatic payments or reminders to stay on top of your bills. If you have a lot of credit card debt, consider consolidating it all with a personal loan or rolling it into 1 credit card. This can help you by paying off your debt faster and lowering your overall credit utilization, which is again one of the key factors in determining your credit score. Finally, be patient. It takes a little bit of time to improve your credit score, but with consistent efforts, you can definitely start to see the results happen. By understanding credit score ranges and the factors that influence them, you can take steps to improve your credit worthiness and achieve your home buying goals.